Let's analyze together into Team Machines, but first of all guys, remember to read the disclaimer right here and in the video description below. Remember guys that you can leave those comments, I'm going to read them in the next video, and also remember to follow us on YouTube if you are not already. And I'm going to tell you guys, this is a very interesting stock because we analyzed it back in January 2024. And the thing here is like the stock, there was a huge breakout right here at the $4 area, and it went up like up to $13. So we're talking about like a more than 200%, yeah, 224. And then the stock went down like crazy. In that sense, we're talking about like a minus 75%. The most surprising thing to me is like this double support area right here. It's like, and there's an explanation to it. And we're gonna take a look at the fundamentals. At the beginning of the stock, it didn't make much sense, in the sense of fundamentals. Like they didn't follow the price action didn't follow the fundamentals. But in the last quarters, it did, And normally that's the case. Stocks normally tend to follow the fundamentals. If we have a positive net income, good. If we have a better positive net income in the next quarters, really good, And you can click right here. Let's take a look at the forecast. This correlation, and this is the really surprising, it's like the reported earnings are completely different from the estimate. Now obviously this is a stock, with like 1 billion market cap, and that's maybe the problem. We only have 5 analysts from Wall Street, and the thing is like this is an average after all, so this is an average of these 5 analysts from Wall Street, but they are kind of wrong, especially in the first quarter 2024, because there was an estimate of 0.07 and the reporting was minus 2.58, so that's completely negative. And we're talking about exactly this one, this minus 98 million back in March 2024. And when that happened, look at what happened afterwards. That incredible negative surprise factor. It created a downtrend, specifically minus 41%. That's kind of huge. But the thing is like they started to buy again the stock at this point. And the earnings, the upcoming earnings at that time, they weren't released, but they started to buy the stock at this point. Then again, we can clearly see the stock went down again. And then when they release the earnings, look at that. Positive factor. The standardized better than the estimate, definitely. And the stock went up like crazy. And you can clearly see right here after the earnings, we're talking about like up to more than 176. Right now it's a little bit down, 115 from that particular level. But obviously this is something important for the stock. But when you buy a stock, you gotta make sure that you're investing in something good, And if we have like such a positive factor, and then we have a positive net income in comparison to the previous one, that's really good. And then we take all the previous quarters, they were also good, even though the stock went down, we're talking about like a more than 30 million per quarter. Even in December, it was a little bit less, but it's still good. So obviously the projections right here is the difficult part, because when you buy a stock, you have to, to make sure that it's a good company in terms of net income. In the past, maybe just only had 1 quarter that it wasn't good. But then again, they take a look at the future and look at the estimates that we have. And that's the complicated thing with this stock, because we can take a look at projections and forecasts. And the problem is like, it's not clear, And right now, the estimate is minus 0.12. If we take into consideration this estimate, it shouldn't be good, because the last one, it was a positive net income. If we go back to negative net income, the stock, should be affected in that way. And then if we have another estimate of minus 0.10 in the last quarter of 2024, that's also, not good. And that's the problematic thing right now, because we experience like a huge upside, but the problem is the upcoming quarters, If we are talking about like a negative net income, for instance, let's imagine, based on that, when it was like a minus 98 million, that was like a standardized of minus 2.69. So minus 0.10 is not that much. We're talking about maybe something like here, minus 5 million, minus 7 million, something like that, So if that happens, the stock should be affected, because right now it's like in plus 80 million. So obviously it should go back a little bit, it should retrace. Based on that fundamental, maybe it could go back to $3, especially when they release the earnings. And here we have it, it's like the estimate 50 million. So obviously you need to take into consideration that, because if we get a bad earnings, the stock should fall automatically down, the same as it happened right here. This is my opinion, of course, but obviously I work in a very top firm of from Wall Street. I have some experience with it, but this is my opinion after all. And you can clearly see right here from the past experience, when they release such bad earnings, the stock retraces a little bit. In this case, we're talking about almost minus 50%. In that sense, and we are now even in a higher level, which is more risky, and then it's not problematic, because in that sense, because it's like not an incredible negative net income, but obviously from this current level it is, and that's what I mean. We were talking about like we are trading at $3. Maybe it's not that much. You could go back to $3 or 2.90, but in this sense we are trading at 7.65. So if they release those earnings and those earnings are bad, it should go back, to $4 at least. That correction should happen based on the fundamentals, because in this stock maybe in the past it didn't happen that much, but when they release the earnings and they are bad, normally a stock it goes back, it goes down dramatically. And then we have another factor, the positive factor and negative factor. It's like when we have an estimate. For instance, in this case, like look at what happened. The estimate was positive, and then they released a negative net income, completely negative surprise factor, minus 4,000% of surprise factor. And what happened is like a devastating downtrend, So that's an important thing right here. And look at what happened in the next one, it's like a positive surprise factor, 200% positive. And then the stock went up like crazy. This is the market. This is how they react with positive and negative surprises factors. Something that you need to take into consideration. Not only the net income, but also the surprise factor, because the expectations are very important in Wall Street, And then we go back. Let's go to the fundamentals right here. Let's take a look at the debt. Here we are talking about like a debt for 43 million. We're talking about the annual. Let's go to the quarterly. So the debt is kind of high, because if you take into consideration the free cash flow, which is negative, that's not good, Negative free cash flow is not good at all. I mean, for instance, I'm going to explain you something. We have Nvidia. Nvidia, they have debt, yeah. But they could pay that debt with that free cash flow they have that right in this particular moment right now. Yeah, we're talking about like September 2024. They could pay all the debt at once if they wanted. But in this case, they cannot do it, because they even have a negative free cash flow. So that's not good. In terms for the long term, we're talking about. It's like if you buy a stock that you're gonna hold in 10 years, and they don't recover from these levels, if they don't improve the fundamentals, for the long term it doesn't work. It doesn't usually work. It depends on the habit as well. But you need to take into consideration this as well. The debt is very, very important. Also, guys, if you have some comments, leave it right here in this video, because we're gonna read them all in the upcoming video about this stock. And it's very important you leave just your opinion, because maybe we are missing something. We are just analyzing the fundamentals, technical data, but we tend not to follow the news, because it's like when we follow the news, we get very, very emotional. And to remain objective in a stock, we only focus on fundamentals and technicals, but also you can leave us your opinions, because there are some important news of our stock or our company and that could affect the fundamentals as well. Even though you can see the price action, obviously the news are important to watch. So thank you very much, guys, to watch this video and follow us. We are the HT Trading Show. Enrique is not today right here, but anyway, he'll be in the future.